Okay, now we're going to leave the general journal. Those were the only two payroll entries. We're going to come back to the general journal in a few minutes. But let's go back to the cash disbursements journal that is found, that we have a second cash disbursements journal found on page 130 and 131. When you have two separate bank accounts, you should have also two separate cash disbursements. Okay? Now, oftentimes we will have two separate bank accounts, one for payroll, one for operating, right? And we might have a separate series of checks for payroll, for that just payroll disbursements. There's a couple reasons why we do that. One good reason to have a separate payroll account is to ensure that you have adequate funds to both pay off payroll and to also pay off the taxes. Now, this is particularly important for companies that don't stay on top of their financial situation, that don't stay on top of their cash situation. Last thing they want to have bounce is a paycheck. Okay? It has terrible ramifications. Not only do they have to eventually pay it, but also they're going to lose employees, or employees are going to get disgruntled. So by having a separate payroll account, they can monitor that more closely, and they can be assured that they have the money that they will need. Also, one of the problems that you run into with small companies is they see money building up in their checking account, and they want to spend it, you know. And if that money is the tax withholdings that you're making from your employees, and they see $5,000 sitting in there, and they think, I've always wanted to have this new piece of equipment, and they're not thinking to themselves, oh, that's money I've got to pay out, there's likelihood that they're going to spend it, and it's not going to be there when it comes time to make the tax deposits. So by keeping a separate account that has all the taxes and the payroll checks in it, the amount of money enough to pay for all those, it keeps it out of their minds so that they're not saying, oh, all that money, I can spend it. They recognize that that money is earmarked for a different purpose. Now, there's some other legal considerations too. It's not required that you have a payroll account, but oftentimes the state agencies will audit the payroll, okay? State Tax Commission or the Job Service will come in and audit your payroll. And they do it to big companies and little companies alike. And when they come in, if you've mixed all your paychecks along with all your other types of disbursements, they're privy to all the information about your company. Whereas if you have a separate payroll account, when you open up your payroll books to them, all they see are payroll entries. So it's just a privacy issue. You know, one of the biggest concerns I always have whenever one of my clients is being audited is, I don't want the auditor to see any information other than what they are supposed to see. This is not a time to say, there's all of our books, have at it, okay? You give the auditor, they'll ask for some information, and you need to give it to them. Don't be stingy with the information they ask for. But where you can, don't open the books to them if they don't ask for it, okay? Now, the reason why isn't because we're trying to hide anything or because we're trying to be secretive, although sometimes there are trade secrets, who our vendors are and what we're paying for things. Those might be trade secrets that we don't want out. But more importantly, we don't want them to see something that is totally legitimate but might appear to be questionable. You've got to be very careful with payroll information. Okay, now we have here on page 130 and 131, we've got 9 checks. The first 4 checks are to our 4 employees to pay them for their great work this past month, okay? Now, let's go through and enter the first check together. The first check is number 1107 to John Andrews on September 5th. When did the pay period end, do you recall? August 31st. So we're paying them 5 days after the end of the pay period. Have any of you been paid on that basis before, where you're paying after the pay period? That's fairly common, isn't it? And it gives the payroll department time to generate all this data and to check it and be sure that they're right. So fairly common practice. We're paying them 5 days. The pay period is the 5th of every month, okay? Now, we're going to credit the bank account for how much? That's right, the net amount of the check, not the gross, but the net amount. I mean, John Andrews would love the gross, but we're just giving him the net because we have to withhold it. So we're going to credit the bank for $2,547. Is that right? $2,547.60.
So the debits are on the...
Remember, there's two journals. The credits are on the left, debits on the right. Disbursements and the purchase journal. So this is a disbursements journal. So the credits are on the left of this journal. Okay? Okay, now on the right side of this journal, we're going to debit what account? What liability are we extinguishing with this payment? Payroll payable. Okay? Payroll payable. So on the payroll payable account, write $2,547.60. Okay? Not the $3,200 because that's the gross pay. We've already recognized that, right? It's just the net. And that's all we're doing with this check. It was very simple. We're crediting the bank, debiting payroll payable. Do you see that? Okay? Go ahead and enter the next 3 paychecks in. Crediting the bank and debiting payroll payable.
Using the information from the check stubs on pages 1.30 and 1.31, make the entries for checks numbered 1107 through 1110. Then restart the program.
See, those first 4 checks, those were the only things for the employees. Now we have 5 more checks. And these checks are to pay off the debts we have accumulated because of it. Check number 1111, for instance, is written to Riverbank. When we pay Social Security and Social Security and Medicare and federal withholding taxes, we pay them all to the bank, not to the IRS. Okay? What happens is every bank has an IRS account. And when we owe Social Security, Medicare, and federal withholding, we're going to write the check to the bank that the check is drawn on. So if we're using First Security checks, we're going to write it to First Security. If we're using Riverbank checks, we're going to write it to Riverbank. And we're going to take that check together with a coupon that comes in a little booklet that looks like this right here. Okay? It's got a whole bunch of coupons in it. We take that coupon together with that check, we hand it to the teller. And the teller will then take the money out of our checking account and put it into the IRS's account immediately. Now, why do you think the IRS wants us to do that?
So you won't know money out ahead of time.
Yeah, well, that's certainly. They don't have to wait. They don't have to wait for the post office to deliver it. That's a plus. But the big reason why is they don't want NSF checks. They don't want non-sufficient fund checks. And so if you go down to the teller and you don't have enough funds in your bank, the teller's going to tell you right then, I'm sorry, you don't have enough funds, can't record this transaction. Okay? So they're ensuring that before they get the money, that's there. Okay? Now they're the only ones out there that can do that, have that authority to do that, but that's the way that they require it be done. So we're going to write a check number 1111, so you should have the first 4 checks in there, right? Does everyone have those in?
No.
Okay. The 5th check down there is 1111 to Riverbank, and we're going to credit the bank for how much?
$2,793.
$2,793.98. Now we are extinguishing 3 different liabilities with this check. We're extinguishing federal withholding, which was $857. That's how much we withheld from our employees, right? $857. So the debit goes to federal withholding payable for $857. Our Social Security payable is $1,569.84. So we're extinguishing that liability. Now, why not 800 and whatever it was? Because we had to match it. So that includes both the employee's half and our matching half, $1569.84. And then Medicare includes both the employees and employer share for $367.16. So we're going to debit Medicare payable for $367. Is it 16 cents? 14 cents. $367.14. And if you were to add up those three, you would find that it adds up to $2,793.98, the total amount of the check. So the credit to the bank account equals the three debits to the liability accounts. Okay? Everybody with me on that? Okay. Let's do the next one. September 5th. We wrote a check to State Tax Commission to pay off the state withholding tax for a total of $342.80. Is that right? $342.80. So the credits to the bank, what's the debit to? State withholding payable. Yeah, state payable. Okay. Next check to National Insurance Company, check number 1113. This is to pay off the group health insurance plan, both their $80 per employee and our $80 per employee, for a total of $640 total. So credit the bank for $640 and debit group insurance payable for $640. Good? Let's go to the next one. Check number 1114 is written to First Credit Union. We agreed with our employees that we would forward whatever we withheld from their paycheck in the way of savings, we would send it off to the credit union. So, two employees had to save some money out of their paycheck. We're going to send that to the credit union, and the total of that was $87. Jane Morris had us withhold $47, and Peter Lund had us withhold $40. The last item check number is 1115 to the State Tax Commission. Now this is paying unemployment compensation tax. Unemployment compensation tax is an employer tax. What does that mean?
Only the employer.
Only the employer pays it. The employee doesn't participate in this at all. It's based usually on the gross wages paid. Whatever its method was, of calculating, it was $80. Okay? So the credit to the bank account is $80. Now there is no account for unemployment compensation tax expense, no column. Which account do we charge unemployment compensation tax to? Do you remember? Payroll tax expense. There's not even a column for payroll tax expense. There is there? We didn't have enough columns. So where do you put it? In the miscellaneous column where it says account name or number, write payroll tax expense. To the right of that, write $80. Okay, so that we can see the amount. We can use those miscellaneous columns for any account. Okay. Now let's go ahead and total this columns up. If you don't mind, I'm going to give you the totals. Will that be all right? I haven't had a complaint yet on that one. Total bank account credits of $14,028.49. So since that's the only total on our left-hand side, that's the total of the credits. Now, the debits on the right-hand side. We're going to debit payroll payable of $10,084.71. So 10084.71. 10,084.71. The rest of them you can probably figure out faster yourself since there's only one entry per column there. So just write those in.
Total all columns of the Cash Disbursements Journal and check to ensure that the journal is in balance before restarting the program.